Hello guys, welcome back to Green Pips FX. And on today's video guys, it's going to be a special one. So I'm just going to break down this trade that I just had my take profit target being hit on gold right here. So as you can see, it's a 1 to 17 RR trade. It's massive guys. It's fantastic. So before we get into it, make sure you like the video, the channel, the page, the everything. Make sure you subscribe, you turn that bell button on for notifications. So when we post daily contents like these, you can get instant notifications and have instant access to this free content right here. So guys, let's get into it. So I was just sitting on the hourly chart, right, and I was just looking at this pair, how it's been moving for the last couple of days, and we had these we've been having this bullish to bearish price action here for quite some time now. So we had been bullish ever since these breaks here. So we started to catch some of these buys in these lows here. We started catching these buys, targeting the highs, of course, up until this area here when price reached this area of supply, when price decided to make this change of character right here. But that wasn't for long, because price just came to do some overall mitigation off of this area of demand right here. And then price came up, drizzled around this area of supply here, right here. So I'm just gonna make this a little bit small just for there. So price just drizzled around here, where we also caught some very good buys in here as well. We was just targeting these highs right here, but our main and overall target was this area here, this area of supply here. As you can see, it's an unmitigated supply zone with imbalances below it. So price has some pretty good reasons for coming all the way back here, and then seeing if we can go bearish towards these lows, or we can just continue bullish to these highs. So that we'll see once price reaches here, and then we'll see some extra confirmations on price action. How price will react to this zone is what will determine whether we're gonna go short or long from there. But the trade that I actually just took was kind of just based off of this of demand here, right? So we had price coming in for this mitigation. This was yesterday's price action, and then price drizzled around. We missed some very good buys in here, but that's not the case, right? So you don't have to catch everything in the market, right? Setups are always there. Now as you can see, so we just had another one. So price just came in here, and people, I know that damn traders are looking at these areas for sales. These wicks, people are already going bananas, selling in here and placing their stop losses above this high. Now I just used that high to my advantage, of course, targeting it as my take profit target, because I know that there's liquidity lying in there. And as you can see, price just takes it, and as you can see, it just lives another wick here. So I don't really actually, like, I've already taken my partials, and I'm just gonna let the rest play. And my trade's at break even right now. I've already closed 80%, so I'm just leaving 20% to continue running if price is gonna run all the way to this area here, because we still have some money in this area. Now, following now the criterion why and how I took this trade. So price just came into this area of supply here, right? This overall supply. However, this is not yet mitigated. I don't know. Can we have a mitigation of that? Yeah, I think we can. So you could just take this tiny little guy there. So boom, so price just taps in there, and then we now had just to consider where price, because once price reached here, what I was expecting, I wasn't expecting for price to come all the way back down here into these areas of demand or order blocks and then continue bullish, right? I was just expecting something short of a mitigation and then a continuation, right? So, and that's precisely what happened, right? Now I don't care if price decides from here to just come all the way down here, right? That would just add me some more money with the buys, right? If that happens, then great. But what I'm overall expecting is price to just continue going bullish, right? However, we might have some liquidations. Price can just come, take some low liquidity, and then continue upwards. But however, that hasn't happened yet, and we'll see what happens when it happens. So there we are, guys, in the 15-minute chart. So I'm just gonna go and remove these guys here. Boom. So I'm gonna take you out too, and I'm gonna take you out too. There. So we had this area here as a continuation zone from which I was anticipating price attraction into this area of demand in here. So this is the kind of pullback that I was expecting, right? Something short, just a small retracement into a continuation zone, and then giving us that continuation, targeting this high right here as our next liquidity run, and then this area of supply here as our overall liquidity run anticipation. Now, however, that played out perfectly. So we had this area here being refined into the 5 minute time frame, where I did take my trade off of this little guy here, right? So now you can see that. So this was just the area where supply and demand were battling each other, and then the bulls won, right? So price just drizzled around this area here, created that super order block here with what imbalances above it. So with imbalances lying above that area of demand, it was more than enough reason for price to just come in here, make that mitigation, and then leave, right? However, price tried to do that once with this fake entry here, but as you can see, there were still imbalances left below it, and this low just acted as liquidity. So with so we already had some sell side liquidity and some imbalances below that sell side liquidity, and also an order block lying below all of those. So that was pretty much very reason enough for me to take this trade. So there we are. So price just came in, tapped into this area of demand here now, as you can see, and then look at what price left me. So I have spoken about this indicators in the previous videos, and how why I use it, and probably how I use it, just a little bit, because it's mainly reserved for the guys in the mentorship. But however, this is how I use it. So this is how I use it, right? So I just wait for price to go into my POI, my point of interest, and within my point of interest, I start to look for a green candle or a red candle respectively. So we use the green candles for buys and the red candles for sells respectively. But why and how we use those, pretty much reserved for the premium stuffs. However, this indicator is called the Mint FX Triple M, right? So just in case if you want to check it out, then you can do that by yourself. So price does what it does best. So price comes in, leaves me that mitigation and this green candle here. So my entry is just at the closure of this candle here. Once this candle closes this way, that's when I take my entry. My stop loss is just below that candle, and my take profit target is always the highs, right? So this high here was what I call my next liquidity run. So there, right? So next liquidity run. So let's just make this a little bit bigger. So I'm gonna put that 16. Boom. So that was my next liquidity run to make this trade a 1 to 17 RR trade. With that being said, guys, this marks the end of this video. However, I just try to keep it short and very informative. But also, if you did find this video informative to you, then once again, don't forget to like, subscribe if you haven't, turn that bell button on for notifications, guys. And also, if you're looking for a broker to trust and trade with, then you can just check on the description below. There are several links of our trusted and recommended brokers that you can start your journey with and become a successful and profitable trader. With that being said, guys, have a nice one. Peace out.